The information in this episode is current as of the date recorded and is not intended as financial, tax, or legal advice. You should consult your tax, financial, and/or legal advisors before implementing any transactions and/or strategies concerning your finances.
Hello, my name is Jakob Brost, and today I'm talking about why long-term investing matters, even in a short-term world. We live in a world where something is constantly telling us to do something. It's your phones, computers, TVs, whatever the case with the technology today, you pretty much have access to it no matter where you are or what you're doing. Every time you open your phone, there's breaking financial news, there's a stock that's exploding, there's somebody who made tons of money off of that stock. And it really creates the feeling that if you're not doing something at any given time, that you're kind of falling behind or missing out on a great opportunity. But the real question every investor should be asking themselves is, does more information actually lead to better investing or better results? First, I want to talk about a little bit about trading and investing, because these are terms that some people use interchangeably, but there is quite a bit of a difference between the two. Trading is about taking advantage of short-term price movements. It's watching the news, watching news on the businesses specifically, technical analysis, momentum, and the holding period for these can be anywhere from minutes, days, weeks, but it's generally more short-term. Investing, on the other hand, is about buying ownership in a business and kind of believing in the company philosophy. You care about the fundamentals, their earnings, competitive advantages, valuations, and then especially the long-term growth outlook for that company. Neither approach is specifically better than the other. It just kind of depends, and they both certainly do require different skills and expectations. In either case, whatever method you're kind of choosing, they do require a pretty strict discipline in either case to be successful. Both need emotional control, discipline, and then very good risk management, setting up kind of guidelines to direct yourself as you move forward. Traders make decisions every day, whereas long-term investors can only make really a handful of decisions every year, or just kind of monitoring and making decisions based on the results each year. So certainly not as many decisions with long-term investing. So now let's talk a little bit about why trading is so difficult. It can look very exciting, as I'm sure you've seen on social media or the news, where somebody's made thousands and thousands of dollars off of trading a stock. Although one important thing you really don't see online is the countless losses they've likely experienced, whether in the short term or long term, because you always hear about the good stuff, not as much about the bad stuff. And most studies that have been done surrounding trading is that only 5% of traders are actually consistently make money over the long term. So it's definitely harder than what it seems and what you might hear online, whether it's the news or social media. Trading specifically demands constant attention, fast decision making, emotional discipline, and that's just the idea of if a stock maybe drops pretty quickly, some people might get stuck in, well, I think it's going to come back, I really don't want to take this loss, and then they end up losing more. So emotional discipline is a big part of it, and then the acceptance of the fact that you will experience losses sometimes, and you just need to make sure your discipline is in check and you can continue moving forward. Even one emotional decision making when you're taking part in trading can erase weeks or months of gains. Another important aspect I like is that you may see online or talk to your friends and they may say, oh, I've made $1,000 today off a stock. My next question is usually, have you sold the stock? And in most cases, I'd say the answer is generally no. So I correct them and just say, you're up 1,000, but you haven't made anything until you've actually sold the stock and realized that gain. Now let's talk a little bit more about long-term investing and why that works for most people. Most investors aren't really looking to predict what happens tomorrow or in the next few days or over the next month or so. They want to know what's going to happen over the next 5, 10, 15, 20, 30 years. The idea is simply to own quality investments over many years. It shifts your focus from daily market swings to diversifying your assets, which is just the idea of not putting all of your eggs in one basket, limiting the costs of those investments, reinvesting dividends and gains. and then letting compounding work over time. And compounding is the idea that if I have a $1,000 account and I make 10% this year, I then have $1,000 and 100 for the next year. And let's assume I still make another 10%. I'm actually making that off of the increase in value, that $100 I earned last year. So it grows exponentially over time. That's specifically why patience can be one of the biggest advantages for long-term investing. One thing I've noticed as working with clients is that some people do enjoy trading, whether they do it for their job, it's just kind of a hobby to them, or they're bored and like to take part in it. It's certainly fun to do, but I would definitely recommend considering keeping it to a small portion of your portfolio. This kind of satisfies your enjoyment of trading. It gives you potential for a high return, but then also limits the potential risk if you do end up losing some of your money in the investments you make. In closing, today's world rewards speed, but investing often rewards patience. More information doesn't always mean better decisions, and especially with technology being where it is today, it's hard to kind of ignore the noise and stick to your plan, but that tends to be a good strategy for long-term investors over time. And again, wealthy people aren't usually building their wealth making trades every day or every so often. They're the ones who stay disciplined through the ups and downs of the market that we're going to experience one way or another. So the market will always give you reasons to react, but long-term investing reminds us that sometimes the best decision is to simply stay put on the course you've already decided on. And that's a little bit about why long-term investing can have a big impact even in the short-term world we're in today.
Thanks for watching. If you found this video helpful, give it a thumbs up and hit that subscribe button so you don't miss future updates. Looking for more insights like this? Head over to our website at jgua.com for additional resources. And if you'd like to talk about your personal financial goals, we'd love to help. Just click the Schedule a Meeting button highlighted on your screen to book your complimentary consultation. Thanks again for joining us. We'll see you in the next video.